Hey there, welcome back to the channel. Today I'm going to discuss three major topics. First, the 6 special lines you should be watching on all of your charts. Second, what other instruments you should be watching if, for example, you're trading ES futures. And last, how I tallied an easy $2,500 on this day in 5 trades while being in the market on average just over 3 minutes per trade. Now, why is that important? Because I want to be out of the market 99.9% of the time. The more I'm in the market, in a trade, the greater the likelihood that a trade is just going to go against me. Now, I'm a scalper, and I really prefer to only scalp long. Do I trade short? Sure, but it's not my preference. And I only do it if 2 special instruments have touched specific lines of their own, which I'll get into in later videos. So I pick very high degree of certainty spots to take entries, and I usually know right away if the thesis was correct or not. If not, I get out of the trade at a small loss, but if I'm right, like on this day, I'll scalp for a few points and get out with 125 to 250 bucks. Now, do I leave a lot of money on the table? Absolutely. But I decided to exchange that for having an extremely high success rate. Besides, if I can make 5 or 6 3-minute trades per day for $1,000, well, multiply that by 20 trading days in the month, and I've got 20 grand. Believe me, I've tried dozens of different ways to trade in over 7 years of daily trading, and I've found this style to be the easiest and most consistent. And it's great for risk management. So let's get into it. So this was the day from last week that shows perfectly how these bounce levels work. Did I cherry pick the day to present it to you? Well, yes and no. I actually did trade these levels on that day, but then at the end of trading, I looked back and I saw just how perfectly everything lined up, and I decided that I had to make a video about the day. So when I came in and did my pre-market analysis, I prepared a bullish thesis, a bearish thesis, a bullish to bearish thesis, and a bearish to bullish thesis. And you're only looking here at my bearish thesis. And you don't have the benefit of being able to see the entire overnight session of the previous day, which did influence my trade making decisions, but not as much as the specific trade levels, which you'll see. So in the pre-market, I saw that if the market came down to here, I was probably going to want to try and scalp along. Likewise, if it came down to here, or here, or here. Now, why did I think those might be good spots for entries? Let's take a look at the chart with some pre-drawn lines. Now, here we have 4 of the 6 most important and vital lines that you're going to need to have on your charts. The regular trading hours open is the cyan blue line. Next is the gray dashed line, which is precisely where ES closed on the previous day. Next is the half gap, the yellow dashed line. This is the precise middle between the RTH open and the previous day close. And last is the white dashed line, which is precisely where VWAP closed on the previous day. So let's take a look at this first trade. Although bounces happen on half gap a lot, it wasn't only that price came down to right to here that I took the trade. It was also because on SPX, price came down right down to its previous day open on the very same candle. It's these kinds of convergences that you always want to be looking for. The greater number of significant spots that price touches, the greater number of algos or buying programs there will be to create a reaction. The same goes for this next set of trades when price came down and came near yesterday's VWAP close. Although it bounced before the VWAP close here, it did bounce here, and it did bounce here, and it did bounce here. Now, were there other reasons why that made it a solid opportunity for a bounce there? And the answer is yes, and here's the reason. The reason is because there was a significant moving average right there as well. Now, I don't keep a lot of moving averages on my charts, but I do keep certain ones, and that is the orange solid line will be the 200 EMA, the dashed orange line is the 200 SMA. The green ones are 100s, but the yellow one, and this is a 1 minute chart, the yellow one here, solid, and here, dashed, is the 200 EMA and SMA on the 5 minute chart, as displayed on a 1 minute chart. I simply have this set to a length of 1000, which makes it equivalent to a 200 EMA on a 5 minute chart. So when price came down to this area right here, it literally bounced on the 200 SMA from the 5 minute chart first, and then it came down and pierced yesterday's VWAP closed and bounced strongly, which is where I took that trade. And then it came down again and touched it again. And because of this convergence, I decided to take it one more time. Now, do I always double dip or take two trades on the same line? Actually, very rarely I do. I just happened to on this particular day because it was dancing around here for a couple of minutes. So I decided to go ahead and see if it was going to run up to this half gap, this 200 EMA on the 5 minute chart here. So this next trade was as simple as ES coming down and bouncing off of previous day close. It was really as simple as that. Was there any other support for taking that trade? Yes. And that was because of SPX. And it turns out that SPX and ES had previous day close exactly at the same spot. So there was an enormous amount of decision making to say, hey, do we want to take this market lower than where it closed yesterday? And often the answer will be no, and there will be a bounce right at that spot. It just so happens that a few minutes later, 8 minutes later, SPX and ES at the same time pierced their previous day close, and it came down and bounced on this line. And that is because SPY had its previous day close right there. So that's one thing you have to watch when it comes down to the markets testing the previous day close, because ES's and SPY's and SPX's might be at different spots. When they are closely bound together, or maybe all three are identical, it's almost golden that you'll get a bounce there if price goes there. So we talked about the first four trades, and then we have price degrading down well into the previous day's trading action below ES's and SPY's and SPX's previous day close. So typically when that gets broken, you can expect that it may very well remain bearish throughout the remaining of the day. But early in the day, in the pre-market, I had decided that there was a very, very high likelihood of a bounce right here. And the question is, what was significant about this spot to make it so powerful for a bounce? And the answer is on the next three charts. This is ES. Here's NQ. NQ's previous day close was right down here, which equates to 5550.25 on ES. Then on Q's, we had a line in a very, very similar area. And then on NDX, that was the precise spot where NDX had its previous day close. And you have to understand that on ES, you can trade futures and you can trade options. On SPY, you can trade shares and options. But on NDX and on SPX, these are very, very extraordinarily large contract sizes. And all you can do is trade options. And for anyone that thinks that the big hedge funds and the banks and the institutions that trade thousands and thousands of contracts of NDX and SPX, if they think they're trading from an options chain and not relying on charts, they're completely missing the concept. People who are trading NDX and SPX, trading options contracts, they are absolutely paying attention, and their algos are absolutely paying attention to the charts. So you've seen the 5 trades, and now I can open up the charts so you can see the pre-market and the previous day. But I do want to mention that even though I only took a scalp here, had I hung in there for the rest of the day, it would have gone back up to half gap, which is where half gap and VWAP for the day converged. And there was a nice short there. And then it ran further on the day and retreated and bounced in this half gap, VWAP, and intraday VWAP area again. And then it retreated and it came right back down to that previous day close on the VWAP, which, as you can see, the previous day's VWAP is right there, and it closed right there, and that's exactly where it is. And it would not go down below that for the rest of the day. Now, I did mention 6 lines that you need to have on your chart, and I only discussed 4. The daily open, the half gap, the previous day VWAP close, and the previous day close. But the other lines, and you see a bunch of lines on the chart, which I'm going to get into in other videos. But the 6 lines also include the previous day low, which you can see from the candles over here that this is the previous day low, and the previous day high, which you can't see from any of these candles, but apparently the previous day's high was sometime in the pre-market. So this was previous day high. And those are significant levels to bounce on. Except you have to know one thing. Like this previous day, where price came down and then came down and pierced previous day low, its previous day low from the previous day, it pierced it and then bounced and pierced it and then bounced. And the reason is because previous day lows will often have stop losses set up below them when people take trades off of the low. And that's why price will often pierce a number of ticks or points below the low and above the high before reversing. Hey, so I'm not done here. I still have a few more minutes and want to show you how this works on all instruments. Really, almost any instrument you can trade, even the instruments that you can't trade but that you watch to help you trade other things, which I'll get into in another video. But do me a favor right now and let me know if you like the video by clicking on the like button below and subscribing if you want to get alerts for when I put up new videos. I'm just starting out, and I understand that likes and subscribers help manage YouTube's algos. So thank you for coming, and thank you for that. Also, I'm thinking that if there's enough interest, I might decide to stream this live in real time while I take my trades. I'd love to see if calling out things as I see them on various instruments and various charts might help others and maybe reinforce the trades I take for myself. So if you'd like to see that, leave me a message below. So here's another instrument, Microsoft. I don't know anyone that day trades Microsoft, but I'm sure there are tons of people that do. And it works the same way. I mean, you look at this particular day, and the close from the previous day isn't really a very big area where bounces took place. But as you can see, the half gap from the previous day was a significant bounce point, and also the open from the previous day was a significant bounce point where it bounced on the rest of the day. So that's another thing that you have to keep in mind when you're looking at your charts. It's not just the lines that you have on your current day chart, but you have to also consider the lines that came from the previous day. And here you can see from the previous day where Microsoft ran early in the day, came down, bounced on its half gap, and then came back down and bounced on its open before running down and bouncing off the previous day low. This is the low from the previous day of trading. And here we have Dow futures, YM. This isn't something that I typically trade, but again, this works in exactly the same fashion, where, and again, it's not going to bounce every time it touches one of these lines, but if you have convergence with other instruments, and with YM, there's DIA and DJX, but those aren't widely traded. So I can't say that it's going to work as perfectly on YM as it does on ES and NQ, but here you see that it is working. It bounced off the low and came up and retreated on this previous day close here, and then ran up to half gap and retreated down to intraday VWAP, which I'll discuss in another video, and then bounced right back up to half gap again and retreated again. And then on the previous day, it started out at the open and ran down and bounced and came up to the previous day low and reversed there, and then bounced and came right back up to the open and retreated there. So these are very, very strong levels. And here we even have VIX from a different day. This is actually today's activity, where VIX opened at the cyan line, ran up to half gap, and retreated. So you know that created an ES bounce, and then ran up to the previous day low and retreated. And that caused another ES or SPY bounce. And that's why I have those arrows there. And then it ran through the previous day close, which is right here, and ran up to the pre-market open here and retreated. And that caused an ES bounce. So that's 1, 2, 3 major ES bounces in the first 35 minutes of trading today. So here's one last glance at an ES chart. This is actually today's live chart. As you can see, the market opened here, came down, and bounced off VWAP and half gap right there, bounced there, and then later rolled over, and this is the ending day POC, you can forget that, but rolled over and went right down to previous day close right there. Bounced here, came back up, bounced here again, and ran on the day. So these lines, they're absolutely vital to have. So that's about all I've got for this video. Again, please like and subscribe, and check out this next video to see other types of lines that are absolutely vital to have in your charts. When used in conjunction with NQ, Qs, NDX, SPY, SPX, VIX, and VX futures, and these 6 lines, you're given an extremely high degree of certainty bounces on a silver platter. So thanks again for watching.